Hey guys, Tank Sauce here, and this is going to be the last video of this intro to futures or intro to trading series. And what we are going to talk about is liquidity, right? And I may have talked about it in some other ones prior to this, but what's liquidity, right? So liquidity is like the driving force in the market. It's what makes the market move. And think of it kind of like in terms like if someone says, what's how liquid are you, right? How much cash do you have on hand, right? So liquidity is where's the money at in the market. And liquidity can come in a bunch of different forms on the chart where we watch it. So price wants to draw towards liquidity and it uses these levels of liquidity to either use as a point to reverse, to retrace, or it'll use those levels as points where it's going to propel right through it, right? And um, the market is constantly gathering liquidity. It's always gathering liquidity. It needs the liquidity to move. And basically, 90% of traders are the liquidity, right? Because not everybody is going to succeed in trading, or they quit before they succeed, or that. But you guys aren't going to quit before you succeed because you guys are here and you're going to grind and get this, right? So, um, let's go over some different types of liquidity levels and some ways that we can identify those, right? So this is the daily time frame. And just here real quick as a quick example, you can see here we made a high, right? And above this high is going to be liquidity. And liquidity will come in the form of stop losses in this, right? So say you take a trade right here. We talked about it in the risk management video a little bit. You set your stop loss above this high. That means that there is now liquidity resting there, right? And the market wants to go grab your stop loss and take that liquidity so it can continue its move, right? So there's banks and institutions, and there's very large players in this game of trading, of futures trading, and they know it's going to seem like you guys will see. They always know where your stop loss is, and it's not necessarily that they know it's there. They just know where people are most likely to put their stop losses, right? There's a trader, and I forget his name, and he says one of the things he always does is he wants to enter where everyone puts their stop losses. Okay. And that's kind of what the banks and institutions do, right? So, one example after we take liquidity, we oftentimes will reverse. And right here, you can see after price on the daily time frame took this liquidity, it shot back down right after, right? Gathered up all the stop losses that are above this, all the money sitting above this high, that from everybody who shorted this, right? Anyone who had short positions right here, they put their stop loss above this high. The market came to get it, right? Didn't quite make it to this one, but it did here. The next one did take it to this. Um, anyways, so that's how liquidity comes. That's what liquidity is. Um, in some other videos and things we do, we will go over some other tools which you can choose to use or to not use. But there's a tool called Bookmap. And what Bookmap does is it shows you all the liquidity that is in the market at any given time, right? And it shows that liquidity because the liquidity is orders. So it shows you where the orders are and it plots it out on a heat map, which basically means, the hotter color temperatures means there's more orders. The cooler colored temperatures means there's less orders. And it shows you where they rest and it can tell you where price is heading towards, right? So we're not going to get into that because that's more advanced. This is again intro to futures, but I just wanted to discuss a little bit about liquidity and some liquidity points that we use. So we are going to use, we'll start off on the month first. And we have previous month highs and lows, right? And those are key levels of liquidity. marker and previous. And remember what I told you guys, the higher the time frame, the stronger the level. Price is fractal, as we mentioned, and stuff does happen on the same things happen on all time frames, but the higher the time frame you're on, and the higher that time frame that level comes from, the stronger that it is, right? So we're going to use this previous month high and low, right? After previous month high and low, what do? We go to previous week high and low, right? You can see here we've just been coming down. So these would be previous week. We'll use these ones here. This one, I use these, it's cherry picked because it's a very clear example of what happens when one gets ran. We'll use these previous week. Is that low? Yeah, previous week low. Previous week high. All right, and then we have the previous day highs and lows, right? And I personally use these levels myself. Whenever I chart, whenever I'm marking levels, these are some very important levels I use. There's indicators that you can use for these levels as well. But I always like to draw them out. Previous day low. I use previous day low because it's one of my main levels. Previous day high, and I mark it in white myself, so that way I know, and it's different from these. So let's go to the 5-minute time frame, right? And we're going to go to that previous month high to start. Okay, now you could probably do it on there we go, on the hour chart. Actually, you could probably do it on the 4-hour chart for time frame alignment, which we didn't go over, but so here you can see when the previous month high gets run, right? We did stay above it for a little bit. This is a couple days of price action. But eventually, price gathered all the liquidity that was above this previous month high, right? 'Cause there's a lot of resting orders here. And there's another thing I'll show you guys in a second. Um, and we had a reversal, right? And after we took that previous month high, we just came down. And another thing I'll show you guys while we're here is that these fair value gaps that we talked about, right? They're pushing price down, right? So there's a fair value gap. We hit it. We went a little bit too high for my liking when I'm using a fair value gap, but it still put it down, right? Here you can use this as a supply level or an order block. That one makes a little bit more sense in this, that it would hit this and go down because you can see the bodies stayed inside the zone. It's important. The wicks can move out, but you don't want the bodies to. So here was a supply zone or an order block that got tapped and price dumped down, and this is after taking, right, previous month high, key level of liquidity. So these are what you call time-based liquidity levels, right? Because it's based on a certain time frame. So previous day, previous week, and previous month levels will be called time-based liquidities, right? Um, and another thing we have right here, which is also another form of liquidity, and I'll explain why, is these two highs make relatively equal highs, right? And what are relatively equal highs? Well, relatively equal highs, and the same with these right here, right? More relatively equal highs. These two, they're really close. It's viewed as resistance, which means that it's viewed that whenever price came up to this level, price couldn't get past it and it shot back down. So what does price do? Well, it's drawn to that level because they know, the market knows, the algorithm knows, that the institutions know that there's gonna be orders placed above these highs in relative close proximity, so they're able to use those to either propel further, right, or they're able to use those to reverse and come back down from. But there's money sitting above here, right? So these relative equal highs right here could have been used in conjunction with the previous month high. Price took it, And this is where you guys would see big money placing orders. They can't place millions of dollars all in one shot. They have to stagger it in. So that's what you would see happening here, them adding money, etc. Right? Yeah. Previous week high. Oh yeah, previous month low. You can even see here after the previous month low was taken, price immediately came back up, right? Previous week low. Here's another example, right? So far, previous week low was taken, and we've been holding below it, right? Um, Maybe this is still going to be the reversal point where we start gathering up our orders like we were up here for us to come back up. Okay, let's go to another time frame here. Okay, and you use these levels to trade towards, and you use them as levels to trade from, right? So if previous day high is here, and you have your analysis done and the reasons to take a long position, you can trade towards that previous day high and use it as a target. As you can see, once we took previous day high, we came back into range. And where do we come back into range? Where we talked about in our previous videos, right? When we're dealing with ranges, price loves to come back to the 50% mark, right? And what did we do? We came back exactly to 50%, and then we came back up. So those are key levels of liquidity. That's what liquidity is. Liquidity moves the market. The whole market moves on liquidity. It needs the liquidity to move, which comes in the forms of orders that are placed on the market. It comes in the form of limit orders, and it comes in the form of stop orders, and it comes in the form of anywhere that there's going to be orders placed in the market. It's usually going to be stop losses, because price knows that people are placing their stop losses above highs, right? Initially, people are said to place your stop losses above and below highs and lows. That's where I place my stop losses, right? We just try to use certain things to make sure that we are picking the right highs and lows, correct? Right here you can see, and I'll have to look, all of these are also relatively equal highs, right? Right here, relatively equal, mark that. Right here, these two, relatively equal, mark that. And you can see over here, initially, price with this high, these highs, price came and it made some more relatively equal highs, right? And then we had one failed jump, well, successful jump, but one last little pop at the end of the day to take all that liquidity right there. And after we took that liquidity, we came back down. Now, these doesn't look like huge moves up and down. I mean, obviously that's a pretty big move and all this, but you got to put into perspective the time frame that we're on. This is the 5 minute time frame. And even this right here, for example, say, let's do the 1 minute because then maybe there's something on the 1 minute. Oh no, it just came straight in. But say you got good enough to just start taking trades after one of these levels is taken, right? These equal highs right here, relatively equal highs get taken. You're like, it looks like you have other reasons to go short, but still you go short right here. You get an entry right here at 732. And let's just say you just take it down right here to 672. So what is that? That's 60 points in the market, right? And in 60 points, there's 240 ticks because there's 4 ticks in every point, which we talked about in the last video on NASDAQ. So with 240 ticks, if you're in with one full-size mini, you have now made, what is that, 1,000, you've made $1,200 from this little move right here. And that only took 2 minutes to happen, right? Now, that's an awesome, amazing move. You're not going to catch those right away, but that is what is possible with trading, right? So, it took a key level of liquidity. What does price like to do after those levels of liquidity are taken? It likes to reverse, right? We reversed, we went short, we got this much. You could have got more, but you don't need the whole move. I mean, shoot, you could have taken it halfway and made $600 only, right? Because you're like, I don't need the whole thing. I'm gonna be smart and take this and make $600 in 1 minute. See? So it doesn't look like a huge move when you look at everything zoomed out, but if you put it into perspective like that, it's insane. And you can make that money at home in your underwear, right? At your computer desk. That's how crazy this is. So um, pay attention to those, right? Previous day, previous week, previous month highs and lows. Previous year highs and lows can be liquidity levels. The all-time high of price, which is currently right here, right? Up here around, I don't know the exact price, but 22,000, or to say 400, 430 is close to the all-time high. There's a good chance that when price gets up to that level, that you can form some type of trade off of it coming back down. Now, you're not, this is the, day time frame, so you're not looking for a massive trade, right? We're just trying to get a little piece of it. So we use these levels of liquidity because that is what price is drawn towards, and that is what price you can trade from, right? After it takes those, you can form really good trades, right? So remember, price is doing two things in the market. It's seeking liquidity in the form of old highs and old lows, which as you can see here, we come up. Oh, wait, I should have left that. We're coming up, right? Here's an old high. Price takes that old high. What was that old high? Oh, look, that old high was relatively equal highs with this one. What happened when we took those? Well, we came down. And if you guys look over here, another indication, right? There's an FVG, that fair value gap that we talked about in one of the previous videos, right? One candle, two candle, three candle. The one and the three candles wicks don't meet, and boom, you have that. So you start combining these things, and that's where you have it. So here we take the relatively equal highs into the fair value gap. You can see the candle bodies respect that fair value gap almost exactly, right? So that's not an accident, just so you know. And you come short. So here is price seeking liquidity in the form of old highs and lows, right? And then what else does price want to do? Well, price likes to rebalance imbalances. And what are imbalances? Imbalances are these price legs where we just move one direction. Or an FVG is a form of an imbalance, right? So here we completely rebalanced this fair value gap before we reversed and came down. Here, do this, get a little better view. Um, you can see price makes an imbalance. Price comes back up here to rebalance this imbalance before it continues down. We came down, and you can see price right here came down to rebalance this imbalance, right? This little fair value gap, this inefficiency. So that is what price is doing. That is what liquidity is. Liquidity comes in the forms of old highs and lows, and price likes to seek liquidity in the form of old highs and lows and then rebalance inefficiencies, imbalances, or fair value gaps. And that's pretty much what we do continuously over and over and over. Imbalance, rebalance, imbalance, rebalance, imbalance. This one was a little bit more rebalanced, but imbalance, rebalance. Imbalance, and you could even see here specifically price for a while before it broke through, but when it rebalanced, we respected this fair value gap, this imbalance right here. We respected it and came back up when we had this initial drop, right? There's another one right here. That price made an inefficiency or an imbalance or a fair value gap and then came back down and rebalanced it before it continued up. So that is liquidity. That is how it works. That's how the market runs. That's why it's so important. That is it. That's the end of this intro to futures course. I hope that makes sense. I hope that works. You guys have questions, reach out to us in the group. Reach out to me, reach out to Diamond Hands, to Fufu, aka Chavez, Drizzy, GGTR, Pancakes, or Matty Matt, and any of us would be super happy to help you guys or elaborate or answer any questions. We will be making some more advanced videos so you can see ways to trade. We'll do some on entry patterns, entry techniques, things of that fashion, so you can have some more tools in your closet and maybe full on strategies for you guys here coming soon. So thank you guys for watching this, and I hope it helped.